Before all the Dave Ramsey fans get mad at me, Dave's a great guy for getting out of debt. No doubt about it. If you're looking to get out of debt, especially credit card debt, and you're just looking to get yourself in a better financial situation, Dave Ramsey is perfect for that. Awesome. For getting out of debt, saving money, all that good stuff. But for investing, especially for stock market investing, in my opinion, guys, and I'm not a big real estate guy, so I'm not going to comment on that. I'm not going to comment on real estate, but for the stock market, it does not make sense what he, recommends on his channel and how he pushes his viewers at the end of the day and what he recommends to his viewers in terms of how they should invest their money. So we're going to break down that in this video very quickly. It's not going to be a long video, guys. So if y'all find value, hit the like button. Of course, let me know your thoughts in the comments. And if you like stock market content, hit that subscribe button and let's dive into it. So right off the bat, guys, my main problem with Dave Ramsey is the fact that he pushes his viewers into actively managed mutual funds. And you guys know, you probably know this, maybe not. I'll tell you right now, most mutual funds out there that are actively managed, they underperform the market. I think a stat came out a couple years ago. You guys probably know what I'm talking about. I think 84 or 83 or 86% of mutual funds underperform the stock market. And again, Dave Ramsey is pushing people to do this, to get into mutual funds through his SmartVestor Pro program, I believe is what it's called, where you can actually talk to a financial advisor and then they guide you, which, they put you in mutual funds, guys. Let's be honest, because he talks about that a lot on the channel. So the whole business model behind it is the reason why Dave is doing this, in my personal opinion. Of course, guys, this is all my opinion. I'm not looking to, crap on Dave, at least crap on him too much in this video. But the reason why he does this is because he gets a kickback from, the SmartVestor pros or the people that actually get these people, his viewers, into the mutual funds, right? He gets a little commission, a kickback. I don't know how much or the percentage or whatever, but at the end of the day, that's the reality of the matter. So he recommends mutual funds, right? Which mutual funds, guys, not only do most actively managed mutual funds underperform the stock market, they also charge you ridiculous fees on top of that. I mean, not only do they underperform the S&P 500, they also charge these ridiculous fees, whether it's 0.75, which is not that bad. I mean, it's bad, but not that bad. But a lot of these are 1%. Well, I don't want to say not that bad. It's pretty bad. I mean, a lot of these are worse, though. 1%, 1.5%. I've seen ones with 2%, a fee, which is just unbelievable. Again, not only are they underperforming, they're also charging these fees, which at the end of the day, guys, might not seem a lot to you right now. If you're looking at your portfolio and it's like 7% return versus, 7.8 or 8%, 0.8, 1% difference, right? That might not seem a lot now, but over the long run, compounded annually, it's a massive difference. It'll be a difference of tens of thousands, if not hundreds of thousands of dollars, depending on your situation and, of course, your time horizon. Just go to a compound interest calculator, guys, and punch in those numbers. You'll see how a 1% difference is a ton years from now. It might not be a lot now, but years from now, it is. So that's my main concern, or not even concern, but my main problem with Dave Ramsey. He's great with debt. He's great with getting you to get out of, your high yield credit card debt, paying down your house, saving money, doing all that great stuff through his baby step program. That stuff is great and all, but his investing is just stupid. In my opinion, it's just dumb. You're better off buying, if you're the average person out there, or you just want to set it and forget it. If that's what you want to do, which is what most people want to do, let's be honest, you can just put your money in an S&P 500 fund, ETF, something like VOO from Vanguard. Look this up, guys. Go to Google, type in Vanguard 500 fund. Type that in. You'll see it right there. Vanguard's extremely credible, arguably the most credible institution out there when it comes to ETFs. I own a bunch of them myself. All you have to do is buy VOO. And of course, this is not financial advice, but all you got to do long term is buy VOO. And if you bet on America, which America, it's had its ups and downs, no doubt about it, but where has it gone over time? It's gone up. So if you're betting on America for the long term, and the largest companies in the world, which happen to come out of America, right, the USA, VOO, the 500 fund, is really all you need. But again, Dave is not about the VOO life because he's getting the kickback from the mutual funds, That's the whole business model, which I'm not knocking, by the way. I'm not knocking that. I'm just keeping it real. I'm not knocking it at all. It's not like Dave is causing harm to anybody or really screwing them 100%. I don't believe that at all. So don't misconstrue that, guys. Just making that clear. He has the right to go and do that if he wants to. If it's part of his business, it's not technically illegal. I just think it just doesn't make sense to me personally, because again, that 1-2% makes up, it's crazy the difference compounded annually over 10, 20, 30 years that 1-2% makes. So again, I'm not knocking Dave. I'm just saying I don't agree with mutual funds. And another thing worth mentioning, it just popped in my head right now, guys. Doesn't Dave Ramsey always say that you have to look at past performance, right? You have to look at the past 5, 10 years and just pick the best mutual fund or the mutual fund that's outperformed the past 5, 10 years. I've seen calls with Dave where he's like, someone's asking him about stocks or whatever, right? You guys know the call-in show. That's the whole base of the show, right? People call in, and Dave said to this one guy, just go look at the past 3, 5 years, whatever did the best, just pick that one, implying that it's going to continue to be the best into the future. You don't necessarily know that's true. You don't know that that's true, and that's just the reality of the matter. So that's another thing that I disagree with him on, just going and picking the best mutual funds, based on performance the past 3 to 5 years, right? I think it's way better to just set it and forget it, dollar cost average into a broadly based, ETF, right? Index fund, and that is going to be your ticket to financial freedom one day, hopefully, unless the world just explodes, which who knows what's going to happen these days, guys. But you could even go more diverse than that. If you don't want to just invest in the United States, you can get something like VT, which is the total world index fund, which is literally the total world. That's not just a saying there, guys. That is the total world. So if you want to invest in China, Asia, Europe, you want to invest in South America, emerging markets, Africa, you want to invest the US, Canada, North America, right? You can do that with VT. So keep that in mind. And that's by Vanguard as well. And this is not sponsored by Vanguard, guys. They just have the best ETFs, in my opinion, for long-term investors, and they make a great product, and their expense ratios are ridiculously low. The fee that you have to pay with the Vanguard ETF, guys, listen to this. It's 0.03% for VOO. 0.03. I think that's $3 for every $10,000. That is nothing compared to 2% on $10,000, which is $200 for $10,000 invested, right? You see the difference there, 200 versus 3? Yeah, that is pretty insane. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, hit that like button, make sure to subscribe, and don't forget to get up to 17 stocks from Moomoo, link down below, or you guys can go to stocksurfast.com/Moomoo. Once you open up an account, you get 1 free stock. Then if you deposit at least $100, you get 4 more stocks on top of that 1 free stock, plus 2 free shares of either ticker symbol AI or BBAI. And if you deposit at least $1,000, you get 17 stocks, guys. You get all those stocks I just mentioned, plus 10 more free stocks for just depositing $1,000. So check out that link down below. It is an affiliate link, guys, so keep that in mind. It helps out the channel. And with that being said, I'll catch you guys later.